mornings. Very late. Okay. Okay. I think we are here. We've finished the process, the process how to calculate TOIs. And I repeat again, you need to remember all of these steps, and also remember what kind of expense it is not deductible, incomes taxable but not recorded. A few examples here. And then all deductible expense but not recorded. Next, you need to remember all incomes recorded but not taxable. Then you have to, and all of this is very important when you calculate tax on income. Okay. And next we learn about taxation of dividends. So when when we're making monies and then we distribute retained earnings back to the shareholder, which we call dividend, what kinds of tax you need to pay. So if you distribute dividend to a non-resident, the dividend is subject to a withholding tax, right? 14%. But if you distribute dividend to a resident shareholder, do we need to pay withholding tax? No, right? So example, withholding tax only apply on for different incomes received by a resident taxpayer: interest, service, royalty, and rent. Yeah. So for resident shareholder, they are exempt from withholding tax on dividend. Okay, but this is a new rule, what we call a additional profit tax on dividend distribution. What we call additional profits tax on dividend distribution, which we can see here. ADDT that can be deducted from tax on income during the year. So why we need to pay this? What we call what happened? Okay. Good. Why it doesn't work? Okay. Yeah. So why do we need what we call additional profit tax on dividend distributions? Okay, we have to pay this type of tax only when you pay out the dividend before from the retained earning before we paying tax on income. But if you distribute the dividend from retained earning, which you already pay tax on incomes, you are not required to pay what we call a ADDT. So it means maybe you pay what we call interim dividends. Okay, the company is running for like 6 months, for 6 months, and then you prepare a financial report, and you see that the company generate a huge amounts of profit. Yeah, when the shareholders see the report, midterm report, and see that the company making a lot of profit, all shareholder very happy and will ask a company to pay, them the dividends. So what we call interim dividends or dividend distribute from a retained earning before we paying tax on income 20% or 30%. So when you distribute a profit that were subject to TOI, then you need to calculate what we call additional TOI calculation. So if you pay the profits or retaining, which you already pay 20% or 30%, then ADDT is 0. However, if you distribute your dividend of from the profit before TOI calculation, you are required to pay what we call ADDT, which is the additional profits on dividend distribution. If your profit tax is 20%, then the formula to calculate this tax is equal to the amount you actually distribute or transfer to the shareholders divided by 0.8 and then multiply by 20% tax rate. So why we divided by 0.8? Okay, yeah, because TOI 20%. So the amounts that we transfer to the shareholder is the income after tax, right? We call this amount what they call income as you can see now. The tax department, they issue the law and they recognize, if we are paying the incomes to a beneficiary, and that's income subject to what we call direct tax. Direct tax can be tax on incomes, withholding tax, tax on salary, all of those 3 types of tax we call direct tax, which tax on incomes of the person who receiving that income. So whatever they get, that the amounts after tax. Okay, and the tax base for the income tax or direct tax is the amount inclusive of tax, and that's why they take the amount that the shareholder receive divided by 0.8. So why 0.8? Because tax rate is 20%. So if you transfer, let's say $1,000 to the shareholder, then you need to divide it by 0.8 and then multiply by 20%. So this is when you calculate this formula to calculate what we call gross income, to find the gross income, which means income before deducting tax. Okay, then how much is it? If just assumes 1,000 divided by 0.8, how much is it? Okay, $250. Okay, the company will pay this $250 to the GDT, but the company can claim $250 as a tax credit to offset with the tax on income when we calculate the tax on income at the GN. So where we shall claim is here. So we calculate, we get what we call tax on income, 20%, we deduct foreign tax credit, and after that we deduct ADDT, which, the $250 we just calculate. Yeah. Yeah. And then we will get what we call income tax liability. So it means this is a final tax, a type of one final tax. And then, if you are not exempt from minimum tax, you're also required to calculate minimum tax and compare which final tax you're supposed to pay, whether it's income tax liability or minimum tax. Okay. So minimum tax is considered as the final tax. Okay, but if your company is subject to 30%, if your company is subject to 30% to calculate ADDT, let's say you pay, if your company is subject to 30%, then your ADDT, if you distribute 1,000 to your transfer 1,000 to your shareholder, so you take 1,000 divided by still 0.8, 0.7, right? Because sorry, and then multiply by 30%, then you will get, how much is it? How much is it? 400 mà. 427.27 បើសិនតែឃើញអញ្ចឹងពេលប្រឡងយើងដាក់429ណា round up ទៅ Okay. Yeah. So but if we subject to 0% TY, yeah, what shall we do? Huh? So if we subject to 0% TY, which means no income tax, hey, then no ADDT as well. Okay, so this is a case where you want to distribute, what I call interim dividend or dividend before, paying tax on income. Then you need to pay what we call ADDT. Yeah, but ADDT is a credit that you can use to offset with the income tax return at the GM. Okay, this taxation related to dividend. So what happens when a local shareholder, a resident shareholder, receive this income? Do they need to pay tax again? No, right? Because based on the TOI calculation process, we are not going to pay tax again. Okay, but of course, from accounting, you have to record as other income, right? Or maybe investment income in your accountings. Okay. Okay, this is what they just try to explain. For TOI purpose, a person who receives dividends and can show the proof of payment of ADDT by ways of the notification as required in the tax form shall not include this dividend in his taxable income. Okay, this is generally it is exempt if you're a resident person receive dividend. Okay. Any question? Okay. If not, then move on to what we call rule on capital gain or capital loss. Okay. So for capital gain or capital loss, what we call general rule on capital gain under the current tax law, all the capital gain is part of the tax on income for a legal person or a registered companies. But if you are not a registered taxpayer, you are required to pay a separate tax, what we call capital gain tax. Okay, but if you are a registered company, a legal entity, capital gain, it is a part of the tax on income. Very special for Cambodia. And like other country, if you are a company, if you generate capital gain, you are required to pay what we call capital gain tax. You are not required to calculate and include as part of what we call a tax on income or corporate income tax. So, but Cambodia, we have a special rule. Yeah. Okay. So the capital gain or loss is the difference between real value of asset and its net book value. Yeah. This is not just new for you. It's also, this kind of definition also exists under the accounting rule, right? The real value, the value that you can get from dispose or selling of that of the asset, and minus book value. Okay, but under tax law, they define there are two types of capital gain or capital loss: realized capital gain or loss. Okay, talking about realized capital gain or loss. Okay, this value arrives through disposal of an asset. Okay, disposal is the intentional acts of the owners or managers of the enterprise. Okay, you dispose asset, and then if you generate gains, then we call it realized capital gains. Or if you dispose and then you get a loss, then what we call a realized capital loss. And another point is we're talking about recorded capital gain. So recorded capital gain, the value arrived through recording in the accounting book of the current values of the asset in replacement of its old value. A capital gain arrived from an authorized revaluation shall be taxable. So shall be subject to tax on profit if you do a what we call an authorized revaluations. But as I mentioned before, there is no government agency or any ministry or government body to actually recognize the revaluations. It's supposed to be Ministry of Finance, but there's no official appointments or official guideline. If you want to do revaluation, which ministry or which government body you need to request for the approval. Okay, but basically, I would say that maybe the tax department is the most appropriate, government body to approve on this request. Okay, but no one do it. No one do it. No one requests because there's no official guidelines. All company, if they do revaluations, they just do it. Yeah, but of course, if the capital gain arrive from this revaluation, whether authorized or unauthorized currently, nobody pay tax. Yeah, but based on law, they said if you do a revaluation without an authorization from the competent authorities, you need to pay tax on profit. But in practice, nobody pay. Yeah. Okay. Why we can get away with this rule? Why? We don't pay? Mm-hmm. He said the law and authorized revaluation is a taxable income. But in practice, nobody do it. I have seen once one company paying, the revaluations, paying tax 20%. That's the only one I said. But the other many, other company don't pay this. Okay. How you can claim that this authorized revaluation is not taxable? How? What is it? The tax law and tax rule that you need to justify that even though I do a revaluation without authorizations, but I don't need to pay tax. Okay, I can get away from this rule. Yeah. Yeah, we learned before, right? At the starting point, taxable income is a net profit realized from all type of operations, right? Include capital gains, only realized. So now you can see the two tax provision contradict each other. Okay? At the start, at the beginning, as a general principle, the taxable income is only realized income from all type of operation, include capital gains, right? But if we run through the Prakash tax on profit, we see another provision talking about, unauthorized, revaluation is a taxable. So it see like contradict. So how, and that's why nobody pay, because they say that they follow a general principle. It's a main a main rule. Okay, if your main rule saying that only realize, okay, revaluation is not a realize. You just record, based on accounting rule only. Yeah, some asset that you are actually required to do revaluation, and some asset maybe you want to do impairments. It depends on each year whether you see the asset will have the increase the value or decrease the value. If decrease, you do impairments, process. If you see that increased value, you do evaluations. So that's based on accounting, and this is unrealized. Okay. So when we see that, say, hey, I know, but I do it because accounting rule require me to do, and this is an unrealized gain, and unrealized gain is not taxable under the main principle of tax on income. Okay. Yeah, not just Cambodia, but any country. If you don't realize income is not realized, not taxable. Yeah. Again, like in the US, right? The US, because you can see the richest man in the world, like Elon Musk, all of those people, they say, oh yes, his boss is around 50 billion or 500 billion or 600 billion, and sometimes reduced down to only 300 billion. Why it dropped so fast or increased so fast? This is only, the revaluations of, of his company share that's required to record what we call net present value, right? Net present value. Okay. So, but he actually don't have cash in the bank, like 500 million in the bank. No. Okay. Now, Elon Musk still the richest man in the world. Yeah. Maybe not, right? You have some problem with his Tesla. Okay. Yeah, sometimes, when, as you can see now, if you are a businessman, you are very successful, but when you want to involve with the politics, even the things that you do, you see that is is correct or right, trying to sell, how to have the country, but you still have a negative impact. Yeah, and that's why sometimes, if you want to be a politician, then from the beginning you start as a politician, and yeah, if you start from the business and change to the politician, you always have problem like Donald Trump, Elon Musk, many other, because career politician always don't like the businessman to be involved with because they're jealous. Career as politician, you can what you can get money from your salary as a politician, so you are not rich. And then if somebody is rich, and then they can do your job, you're jealous as a human being, right? Big or small. I'm not sure about you, but I see now. You can see even Donald Trump do the right thing, or okay, they never admire him or appreciate him. But when he did the wrong thing, they will shout it loud. Oh, very bad, very worst in history, blah blah blah. Okay, yeah. And all of this work, many other politicians always trying to do that way, but they cannot do it because there's a lot of problem along the way. Obama want to reform, want to cut the government spending, but he can't do it. He couldn't do it because if you do it, he will become a bad president or a bad person, because it will affect his colleagues, which actually can get money from that process. Okay. Only the business that you can decide, okay, if I don't want to pay, I don't want to pay, but the government, you have to follow what we call due process, right? Okay. Anyway, just want you to see why, if you want to be a politician, start as a politician from the beginnings. Okay. If you, want to be a businessman, then doing business, don't involve with politics. You work with the politician, but, behind the scenes, you cannot come to the front. Okay, it will impact your business, negative impacts. Okay, move back to us. Tax regulation do not allow, they just said, do not allow record of capital loss in forms of provisions. Okay, this is we do impairment, right? If you record a impairment, it means record a loss on maybe on the asset, is not deductible. Yeah. When you do impairment of the asset, it is non-deductible because they said that they do not allow you to record a loss. But when you record gain, they want you to pay tax. If you record loss, no, not deductible. Okay, it's a buyer rule. If you record gain, oh, I want you to pay tax. If you record loss, not deductible and fair. Okay, so that's the rule. Yeah, and that's why I said in practice nobody actually paying tax, even though you record the gains. Okay, you try to claim that it's an unrealized gain, and that's why it's a non-taxable income. Okay, loss you just add back. Okay, fine, no problem. Okay, they said if you do an authorized capital gain or loss, yeah, it's a gain that you pay tax, and loss you can deduct if it is realized, which means if you, so the realized will go through what we call a disposal of the asset, Okay, another special rule that you need to remember with respect to the, a capital gain or loss on asset, is that loss on sale or exchange, loss on sale or exchange of properties, whether directly, indirectly, between related person, is not deductible. You mean if you record loss, if you sell the property to your related party and you record loss, this loss is not deductible, even though it is actually realized. So a special rule. But if you dispose asset to a third party, if it is loss, you can claim deduction. Why? Why they need to have this kind of provision under tax law? Because they said the related party, you can negotiate, right? Sometimes you can, reduce the price, because like a sibling, a parent and son or daughter, or maybe you can get it free, or you can get it low price, and that's why the tax law, they always have a provision try to protect, the relationship between related party. Of course, if you record gains, then you pay tax. But if you record loss, then you cannot claim as a deduction, even though it is a realized. Okay. Yeah. If you transfer as a gift, so there's no value at the time you actually transfer, and then of course you will record loss, right, in your books. Yeah, this loss is non-deductible. Yeah. Okay, that's a special rule. Remember that. Yeah. In the final exam, I see they have this kind of questions. This kind of question, not often, but not often. But yeah, I see a couple of times in the last 10 years. Yeah. Maybe they may, But it's not complicated, right? If you say, oh yeah, the company is selling a property to its related party and now they generate loss, maybe $10,000, okay, which they record in this account, and then you add back. Okay, just that. Okay, this is a rule on what we call capital gain or loss. Okay, capital gain or loss can happen with from like two transactions. First, realized through disposal, and unrealized through revaluations. Okay, now we have a rule on what we call deductible and non-deductible taxes. Okay, deductible tax include what we patent tax. Okay, you need to remember always coming out during the custom duty, specific tax, 1, 2, 3, non-deductible or non-creditable VAT input, what we call wealth transfer tax, or 4, 5, stamp tax, 6, tax on transportations, 7. What else? We have a patent tax. Patent tax you need to pay once a year. It depends on your business, but if it is small, you pay around $100 a year. If you are medium, how much is it? Medium taxpayer, how much you need to pay? Small, 100 a year. If you are medium taxpayer, how much patent tax you need to pay? How much is it? Yeah, say it. Speak it louder. 300. Yes, correct. So 1.2 million Khmer Rio. So it's around 300. But if you are large taxpayer, how much is it? 2 million if your turnover is less than 2.5 million. If your income or turnover is less than 2.5 million, you pay 2 million, 2 or 3 millions. 3 millions Khmer Rio, not 2. They increase. Before you pay 2 million, but now they increase 3 million and 5 millions. So 3 million, if your turnover, equal less than 2.5 million, you pay 3 million a year. But if your turnover more than 2.5 million, you pay 5 million Khmer Rio. So equivalent to 1,250. Okay. So if you are large, then you need to pay. If your income your patent tax, 3 million Khmer Rio. So equivalent to 750. But when you answer during the in the final exam, always Khmer Rio. Okay. But if your income this is US dollars, then your patent tax will be 1,250. So it's equal to 5 million Khmer Rio. Okay. I just want to remind you because sometimes the multiple choice question I see they ask you quite often. Okay, all of this tax you can claim as deductions. Remember it, and the tax that what you pay, but through what we call withholding process, which mean such as what we call a salary tax, already mentioned, withholding tax, and fringe benefit tax. Under the current law, fringe benefit tax also collects through what we call withholding process. So you are a taxpayer, you are an agent of a tax department. When you make a payment of a benefit to the employee, you need to deduct, you need to withhold and pay the fringe benefit tax to the GDT. And that's why they call the tax collect through withholding process. And if you pay on behalf of those beneficiary, this tax expense is not deductible. So just remember salary tax, withholding tax, and fringe benefit tax. Yeah. Okay. Yeah, specific tax, we will learn about it. We have another tax, what we call public lighting tax. Yeah, we will learn about it. Maybe second week of May, we will learn about specific tax and public lighting tax. This is another, and then we learn about what we call accommodation tax. Yeah. So those tax is not collected through withholding agent, withholding process. And if you pay, then you can claim as deduction. Okay, that's the rule on what we call deductible and non-deductible taxes. Last point. Okay. Yeah, it seemed like we finished TOI, and we will learn how to actually do a tax on income computations, but not today. It will be on Saturday. I will send you the question. Actually, I used past year exam, maybe past year exam. Okay, but now we're talking about capital versus debt financing. Yeah, if you are an investor, you invest through these two main you invest through capital, which means you invest as equity. And debt financing, maybe you invest through buying what we call maybe loans. Yeah, you provide a loan and then you get interest income and return. Okay, capital financings, capital contribution, whether in cash or in kind, is not taxable. I just mentioned if you invest as equity, whether you inject as a cash or kind is not a taxable income. Yeah, when you inject as a equity, whether in cash or in kind, it is not taxable. You don't need to pay tax on your investment as equity. Okay, but when you invest through what we call debt financing, yeah, okay, as a loans, you provide a loan, and then you generate interest income. So this interest income that you receive, if you are a resident, you need to pay. Okay, you get interest. Yeah, withholding tax, right? Can be 14% if non-resident, 15% if you are resident. And the next you need to take into account is the deductible expenses related to the interest you pay. If the company getting a loan, receiving a loan, and then pay interest, we need to take into account what we call deductible expense that have a limitation. We calculate. So the maximum interest expense deduction equal to, do you still remember? Maximum interest deduction equal to, does anyone still remember? You need to remember, you need to do it. Okay. Equal to, first of all, you need to pay withholding tax. And next, for the interest you pay, you need to take into account limitation of deductions, right? Maximum interest deduction equal 5%. No, incorrect. Hmm? I had, did I say 15 or 50? 15. No. Huh? Okay. Okay, try your guess. Yeah, 50% of what? Of net non-interest income. Income, that's it. Plus interest income. Okay, so the maximum interest deduction is equal to 50%, 50%, 50 of net non-interest income plus interest income. You need to remember this formula, because you are required to do it. It's compulsory when you calculate tax on income. Yeah. So another one, just want to remind you, also have a limitation, which is the charitable contributions. The maximum charitable contribution equal to maximum charitable contribution deduction equal to 5%. Yeah, 5% of profits before deducts the charitable contribution. Before deducting charitable contribution. Okay, the formula, you need to calculate 5% of the profit plus charitable contribution that you contribute to, maybe charitable organizations. Okay, that is also compulsory. Please remember this. Okay, formula. Okay, so yeah, if you get a loans, you pay interest. First, you pay withholding tax when you pay, but at the end, you need to take into account the limitation of a deduction of that interest. 50% of net non-interest income plus interest income. If your interest expense incur more than this limitation, you need to add back. Okay, you need to add back. So the excess amount can be carried forward to offset with the future tax on income. Can we carry forward? Can carry forward for 5 years. Okay. How about charitable contribution? Can we carry forward? No, right? The excess amount, become a permanent non-deductible expense. Okay, but interest we can carry forward for 5 years. Yeah. Okay. Are you do you know what we call share premiums? Yeah, share premium. What is share premium? What does share premium mean? You know, if we're talking about share, it's equity, but share premium also equity, right? Yeah. But why we don't call share, why we call share premiums? Excess, what you pay, which is excess, the what we call ordinary share. Yeah. Because when you start up the business, whatever you inject in, you call share. And then you will have like a par value of the share, right? Yeah. So, and if later, you know, when after the company start operations and the company may, you know, sell more share, they want more equity, they will issue share to the shareholder, you know, to the investors. If that investor pay more than the par value, the excess amount could be called share premiums. So share premium record in the equity account. Also, share premium also non-taxable income. Okay, so share premium treat us the, you know, like a share, like normal share, and it is a non-taxable income, so you don't need to pay. But in practice, I experienced some tax officer, they say that, oh yeah, the company actually generate more income, more profit, because the par value of the share when you inject at, you know, before you start operation, only $1. But now when the company issue, you know, more share, and the new investor or existing investor will inject not just $1, but $3 into the company. And the company will record $1 as a share, and then the different, the $2 is the share premium. Yeah, but it's still in the equity accounts. Yeah, and some tax officer, you know, now they don't decide yet whether it's taxable or non-taxable, you know. So some will say yes, non-taxable. Some will say no, it is taxable because it seemed like the company, you know, receive a gain on issuing more share. So it's not make sense, you know, to me. Because share premium is it's equity. Yeah. Okay. So but after, you know, fighting with the tax department for many years, it seems now they agree that you know, share premium is not a taxable. It treat as the same you know, capital. Okay. You know, based on current rule, investor can invest through, you know, whether equity or whether debt financing. How about you? Which one you prefer? If you equity or debt financing? If you invest through the equity, you need to include that investment in what we call a article of incorporations of a companies. Yeah, but if you invest through you know, capital financings, there's no tax payments. You know. But of course, when we invest through equity, the shareholder will receive income in return, what we call a dividend, right? Dividend. If the company make money, but if the company don't make money, you receive nothing. But loan, you always get back the interest, even though the company make money or not make money, right? You are required to pay on a monthly basis, maybe on a quarterly or maybe yearly basis. But of course, the obligation of the company is required to pay interest to the lenders. Okay, which one you prefer? Equity or debt financing? Debt finance. Yeah. Yeah. Now, acting as an investor, which option you prefer. Cambodia, there's no restriction, but at least you can go with very small equity because you can set up a company, register a company, just $1,000 equity. If you commit to invest $1,000, okay, now you can register as a company. And when you, $1,000 is not much, right? What we call minimum capital, minimum registered capital. Yeah, 1,000 actually a lot. Some country only $1, like Singapore, maybe UK or other some country we will, okay, you just commit $1, you can register companies. But $1 to 1,000, nothing. Yeah. So next, the company required to more funds, yeah, to keep the company running. Yeah. Then you can decide later whether you inject more capital or provide as a loan to the company. So if you provide as a capital, the company don't suffer because they don't need to pay interest. They only pay you when they make money. But if through loans, of course, the company have an obligation to pay you interest every month. Maybe it hurt companies, yeah, if the company doesn't do well. Dân đặt chia equity,ក្រុមហ៊ុនអត់អីទេគឺ happy. From a company point of view, they want to have the investment through equity, not a loan, because they need to pay back the shareholder when the company make money. If they don't make money, no retained earnings, no profits, no dividend. So from the company point of view, they want to have the investment through equity. But from the shareholder point of view, equity is very risky. Yeah. If a company went bankrupt, you lost. Yeah. But through a loan, yeah, you also have a risk, but you can collect income on a monthly basis. At least you can collect some. Yeah. Okay. So in order to decide which option you choose, you have to come up with what we call a financial model of that investment. Okay, you try to say, hey, now if I invest 1 million, what will happen? Okay, as equity, how much money I will will make, how much dividend I will receive. Okay, maybe I register invest through equity only maybe 1,000, and the rest through loans. What will happen? So you have to do what we call financial model. Which one is the best option for you? So as a lawyer and tax advisor, I always recommend, always, in any case, try to minimize the equity investments. If it's not necessary, as low as possible, because you don't have a risk. Why? Because if you want to get money back, if you invest through equity, you have to request to the government authority before you can take back the money. Yeah. So based on the company law, the company can reduce capital by 50% per times. If you invest 1 million, if you want to get back, the capital, you request to the Ministry of Commerce, say, hey, I want to reduce my equity from 1 million. Now, maximum you can reduce per request is 50% of that equity. So you can reduce $500,000. Yeah. And then we all depends on them, whether they're happy to approve or not. If they don't approve, you cannot do anything. If they happy, yeah, okay, they will approve. But in any country in the world, requesting, yeah, you have a law, you are allowed to, but the request, the decision is based on discretion of that ministry. And many companies, most of it, they will not approve. Yeah. They will not approve. So, but Cambodia, we have a pressure. So we want to have foreign investor, FDI. I see that they approve MOC, don't really care that much, But many countries, you cannot do that. Thailand, Vietnam, you cannot request to reduce the capital. Even the law exists, but they don't approve. They say, oh yeah, you cannot do it because, But Cambodia, I have seen they approve, MOC approve, but the GDT doesn't like it. When you reduce capital, capital reductions is subject to withholding tax if a non-resident. Capital reduction under tax law, they call dividend. Okay. Okay, they cannot change their company law because we follow, many country rule. You cannot change by just saying that, oh, you cannot reduce capital. They cannot do that because if you do that, you will, no investor going to invest. Okay, but to prevent the capital reduction, okay, now they let the tax department issue a new definition. If the capital reduction is a dividend, you have to pay. If you are non-resident, you pay 14% withholding tax. Okay, but if you are a resident, no, right? But if you are a resident, your money is still in the country, whether you, with the company or with your accounts, it's still in Cambodia, right? The country doesn't lost the monies. Okay. Okay, and that's why I always recommend foreign investor to have a minimum capital, and the rest you can fund the company through a loans. Okay, and then the loan, if you want to charge interest or not charge interest, you can charge or not charge. Cambodia allow, say, interest-free loan. You give as a loans, but you don't charge interest. So in this case, whether you want to charge or not want to charge, it depends on a company operation. If your company will make money fast, charge interest is the best solution. And this is a type of tax planning. Why? Because interest expense can be deductible. If it is deductible, okay, you pay interest. Of course, you pay withholding tax, 14% or 15%. But if you can claim as a deduction, it means you can minimize your tax on income. Your tax on income is 20%, right? Withholding tax only maximum 15%. So then you can save 5%. Yeah. But if your company cannot make money fast within 2 or 3 years, you will suffer. Yeah. The company will went bankrupt because no money pay interest. And then you record always liability. Liability always keep increasing. Okay. And if you cannot pay interest, remember, if you get a loan from a shareholder, it's a related party. If you cannot pay interest within 180 days of the following year, that interest become non-deductible and now become worse, right? Yeah, pay withholding tax 15% or 14%, and now cannot claim deduction. And that's why if your company cannot make money fast, interest debt financing option is not favorable to your companies. Yeah, and then equity will be the best option. Okay, so I mean, business investing is not a fixed. We don't have a fixed rule. It's always depends on the company's operations. It depends on the nature of the business. It can be changed every time, but keep in mind, try to minimize the investment through equity. If you can do it, please do it. That's the best option, not just in Cambodia but any country. Yeah. Okay. It seems like we're done. Yeah. Practice, but we will do it on Saturday. Okay. I will take the PACHI exam, like two TOI. We'll spend around how many hours? 3 or 6 hours. 6 hours. Okay. Teach you on how to do a TOI, because this is very important. If you can do TOI, I can assure you, you will pass it, the exam. If you cannot do TOI, very tough. because multiple choice question, it's like it's a gamble. Sometimes it depends on your lucks, Yeah. Okay, so done for today. See all of you again on Saturday. Okay. Tomorrow holiday day. Tomorrow. It's Labor Days. Okay. Do you have any plan to go anywhere? Come to school? School still open, right? Okay.